India's largest airline by market share, IndiGo, will lay off 10% of its workforce as COVID-19 impact cuts deep, CEO Ronojoy Dutta announced. The domestic carrier had begun laying off a section of employees in June, while also extending compulsory leave without pay for others. It had also recently cut salaries across levels, but these measures were not enough to offset the decline in revenues. While this is the first formal announcement of a layoff by a domestic airline, all its peers including Air India, Vistara, SpiceJet and GoAir have been forced to take similar steps to reduce costs. To limit the spread of the coronavirus, domestic flights were suspended in March. The airline services resumed on May 25th, but airlines continue to operate at about 30% to 45% capacity, which is a small percentage of an airline fleet. IndiGo CEO had said that airlines were burning cash to cover fixed costs. Fixed costs can be as high as 40% for airlines, and Dutta had pointed out that IndiGo was spending rupees 40 crore a day during the lockdown. Data from industry regulator DGCA showed that traffic had plummeted by 83.5% year-on-year in June. While IndiGo had announced a financial package for those impacted by the layoff, advisory firm Kappa India had said that COVID-19 disruption will eventually leave about 30% of the aviation industry's workforce redundant. But the COVID-19 disruption may have changed the aviation sector structurally. According to the International Air Transport Association, airlines worldwide were estimated to have received $123 billion in government aid as of mid-May. In the absence of any such bailout in India and in a first for a state-owned carrier, Air India has begun a cost-cutting drive and will send around 600 employees on furlough. Raising concerns about a weak operating environment in 2021, a recent report by Goldman Sachs said consolidation in airlines will happen soon. Even the low crude oil prices cannot compensate for the reduced operations. The profit margin of airlines is also expected to narrow in FY21. Revenue of airlines in India could decline by $11,600 million in 2020 beside millions of dollars hit on aviation and dependent sectors due to the coronavirus pandemic, as per the International Air Transport Association. Airlines in the Asia-Pacific region will be the hardest hit and are expected to clock close to $29 billion in losses for the year, more than a third of the $84.3 billion industry losses globally.